Hi guys, welcome back. Roy Cousins here on behalf of Liteforex Broker with our weekly session. This is the second weekly session we have on Thursday. This is actually the educational part. On Tuesday, we're having kind of a real-time analysis on the market, where basically I share my personal trading activities. On real time, my personal my open trades, my open positions, opportunities that I got my eyes on, analyzing it from A to Z, but it's less educational. It's more to the point, with the intention to make money, clean cut. Here on Thursday, however, this is going to be educational, so I'm going to teach you a lot of cool stuff, tricks and techniques, trading tactics, strategies, all sorts of good stuff, but mostly I would say valuable stuff, priceless. Really the things that brought me to the point where I'm at today, which, trading the markets for a living, full time, from everywhere, from anywhere in the world. Basically, having that freedom, that degree of freedom, it took me a lot of years to reach that point. A lot of trial and error, but I'm going to deliver to you this whole evolutionary process on a silver platter, if you will. So I'm going to cut your your learning curve significantly, and all you need to do is just consistently follow up. Both on the Mondays, on the Tuesday session, which is the dynamic analysis, and on this educational session. I'm going to share with you my holy grail of trading methodology. All right, this is the symmetric trading methodology. This is a phenomenon that I've discovered about 10 years ago, and later on developed over the years and refined a really high level trading methodology, which is by far the most reliable predictive system I've ever came across. And believe me, I've tried everything under the sun. I mean, I went on to become a master in technical analysis. There's actually such a title. I went to the International Federation of Technical Analysis. You can look it up, ifta.org, to become an expert in technical analysis. But it only made me understand that most of it is pure noise. You know what I mean? Most of it, like 95% of it, is not only bullshit. It's not only not helpful, should I say, but it's also misleading. It can lead you to make mistakes and errors and stuff like that. So I actually acknowledge that there is more than what you can just find, in a search on Google, or all of those, countless books that you can find in the subject of trading. All these popular, common, basic technical analysis stuff that mostly don't work, unfortunately. I actually had to discover that the hard way, so to speak. So I'm going to present to you high-level stuff, advanced stuff, right? But I'm not going to overwhelm you with information right from the get-go. We're going to build it up. We're going to take it step by step. We're going to build it up, layer upon layer, as we should, right? So, are you ready? I'm ready. Let's go. There's no better place to start than a live chart, right? So, I want to start actually by talking a little bit about the price structure, right? Because, the common conception is that price action could be divided into two types. It's either trending, it's either in a trend, or it's consolidating, right? That's the official terminology, but it's referring to a trendless market, right? Price action that moves sideways, horizontally, right? It's not a trend, it's a consolidation or a trading range. There's a few names for it. And you know, over the years, I kind of learned, you know, by developing the Symmetric methodology, because the Symmetric methodology, at the end of the day, what it does, it helps you dissect the market, really break down the inner moves, you know what I mean, the legs, the inner legs, and that in turn helps you to read the market a lot better. That's the bottom line, reading the market as, you know, as best as possible, because at the end of the day, your decision-making process is completely relying on your ability to analyze price action, right? I mean, unless you just, you know, you gamble on the price action, right? That's not what we want to do here. That's not going to lead into profitable trading. What you want to do is be able to read the market correctly and make good trading decisions upon that, you know, interpretation, right? So after a lot of trial and error and a lot of money lost, I kind of learned the hard way that I need a reliable set of support and resistance levels. It all starts from that, right? Because in order to dissect the market and to be able to differentiate between a trend and a consolidation phase, right? Because these two phases require different actions, but also to understand the basic structure of price action, because it's all about cycles. I came to the realization that I need a better set of, you know, more reliable set of support and resistance levels. Now there are many. I mean, you can search on Google, you can find a lot. There's no problem. I mean, you can find them, just to name a few. You got GAN, you got Fibonacci, you got the pivot point, market profile. There's many, right? But I couldn't find the you know, a really reliable set of support and resistances that would also give me kind of a framework to work with. So I came up with this solution. This is a really revolutionary way to analyze and predict the markets. This is the Symmetric Setup, right? Now the Symmetric Setup, what it does, it helps you understand price action in the sense of, for example, right, we're looking at the New Zealand versus the US dollar right now, daily chart. Now what you're looking at here is no question is a downside trend, right? No doubt, this is a downside trend. But if you switch to a weekly chart, suddenly you're looking at a whole different type of behavior. Basically, this is a sideways movement, right? I mean, you can see how price is just trading up and down, up and down, up and down, up and down, right? So what we saw on the daily chart was this segment, right? Obviously enlarged. So we saw just this type of, this leg, this is just one leg in this trading range, massive trading range, by the way. This is a weekly chart, right? So it goes back all the way to 2016. But this is a massive trading range, but you have to understand what you're looking at. It's really hard to make money if you can't understand what you're looking at. So the Symmetric Setup, what it does, it sets the boundaries that help you dissect a trend from a consolidation. But it also helps you to understand that a trend and consolidation doesn't really have to be separate. They're basically the same, right? It's all about perspective. So if I'm trading, you know, if I'm a long-term trader, right, a position trader, that I would be focusing on the weekly chart actually. And I would consider every single leg here, right? We got a few legs here, 1, 2, 3, 4, 5, 6, 7 legs. Every single leg is a trend, right? It's a trend. It's actually could be considered as a major trend. I would not say the grand trend, but it could be considered as a major trend, because just take a look at the last downside segment we had here. It started at the beginning of 2018, so it's almost a year, right? So what you saw here is a pure downside trend. Is actually just a leg in the sideways movement, right? In a higher time frame, higher scale consolidation. So where does the symmetric setup get in here, right? Where obviously we're not going to dive in too deep into the methodology. We're gonna build it up gradually. What I do want to do here is first to talk a little bit about, to describe the general concept of the methodology, what it does, first and foremost, to help you understand our Tuesday session, right? Where I talk really fast and I go over the opportunities, and I talk really bit about the technical picture and the technical situation and stuff like that. I want you to understand what I'm talking about, where I'm coming from, and where I'm going to. So we got the C matrix here, which is purely 4 levels. That's all it is. It's 4 key levels. That's how I call them, right? That dissect the market here, price action, into 3 parts. Right, let's take a look at that. So this is the New Zealand dollar. Ever since it began to trade sideways, right, because it came from price action came from below. It was an upside trend. But at some point, right here actually, price shifted from a trend into a sideways movement, right, a trading range. It started to develop a trading range on a massive scale, very wide, by the way. So it started roughly at the middle of 2016, and it started with the first leg, followed by the second, third, fourth, fifth, sixth, or whatever, right? It doesn't matter right now. It doesn't matter the count itself, but you can see how many legs just went up and down, right? So what I did was I took the first leg and I applied the symmetric setup. Now the symmetric setup, what it does here, it engulfs the trading range. It engulfs price action. It gives you the boundaries, the limits with which price is most likely to trade in. So you got the outer key levels, right? The outer key levels, namely the top key level and the bottom key level. I'm talking about, of course, this blue system that you see, right? Forget about this black 4 lines here on the right corner. Just focus on the blue key levels, because what you see here, it's actually a live trade that I have right now, and I have a second setup. So sometimes we have second setup and a third setup. It sounds like it's making it more complicated, but it actually simplifies the general picture. But what I'm trying to say here is that this particular setup can give you not only a very strong clue with regard to the next move, right? Because here every move, we're talking about months, right? We're talking about the general trend. So it's very, it's priceless to know, for example, right, that at this point price is going to reverse, and not only it's going to reverse, but it's going to hit it's going to make it at least to the level to this particular level, which price tag 0.7337. So I actually know with very high probability, by the way, obviously there is nothing 100% bulletproof, right? But with a very high probability that at this point where price began to turn around, I knew that it's gonna make it all the way to 73.37 at least. That's gonna be the minimum level. All right. So this is the power that I'm able to convey with the symmetric setup here. So basically, at some point, right? And by the way, this setup that I'm showing you here on a weekly chart is applicable to any time scale. This is the beauty of the system. All you need to know, all you need to find is the first leg in the trading range, right? Where where the sideways movement begin, and then you follow the legs. Now, obviously, in later sessions that we're going to have in the future, I'm going to explain exactly the whole, there's a full set of principles so that it's gonna be much simpler. And don't worry if you don't catch up right now, if you don't fully get it. It's gonna take some time, right? But at the end of the day, this system helps you first to find a very good entry. Second, it helps you to understand where the next move is going to go to, so it helps you to find the exit, a reliable exit, by using this set of support and resistance key levels. And by the way, they switch, right? Where price cross below, for example, take a look at this level right here, 70.08. This is the mid-low key level. That's how we call the mid-low key level. Once it gets broken, it turns into a resistance, right? Until it gets broken, it's a support. But once it gets broken, it's a resistance, and then once it gets broken again, it turns into support. So it's interchangeable, right? The levels are interchangeable, but it's also true with regards to any support and resistance levels. So I was able to trade very profitably on these legs, every one individually. I mean, I haven't took all the legs here, because there are some principles that I'm going to incorporate in the future. So you're gonna understand that what I'm trying to build up is basically the ideal setup, the ideal situation where it's the right time to strike, right? So just to complete what my point here. So the setup, basically what it does, it gives you limits to and boundaries to where the trading rate, where price action is most likely to go. So for example, we got the top key level right here, and we got the bottom key level, right? We call them the external key levels. So these are the boundaries. Price, right? And here's the bottom line. As long as price remains inside of these boundaries, it will remain trading sideways, meaning it's going to continue to build up upside legs and downside legs, right? And that's huge in terms of having that for a knowledge, having that for a probability, high probability, because you can take the next move and you can just surf the waves all the way through, as long as price remains between the external levels, right? That's the first principle, basically. That's the first principle. Second principle is, I told you that these four levels dissect the market, right? Dissect price action. Now, here's what I meant by that. Because these four key levels create three sections, right? They create the upper section, right? Which is this, right? Between the top key level and the mid-high key level. This is the upper section. And they create a second section, which is the middle section, right? All this. Everything between the mid-low key level and the mid-high key level. And of course, the bottom section, right? Everything between the bottom key level and the mid-low key level, right? This section. So it dissects price action into three different sections, right? Three parts. And here's the second principle. Where price comes from one external section, it's gonna go with more than 95% of the time, all right? It's gonna go to the other section. It's gonna go through the middle section, and it's gonna hit the other section, right? The opposite section, if you will. And it's going to do it consistently until one of the external key levels is broken, all right? So until that happens, you know that it's going to travel from one section to the other and vice versa, all right? This is really the very basic concept of the Symmetric methodology. So now I can break down the actual price action into legs and start trading these legs independently. You see what I mean? So I'm always looking for the reversal point, right? The tipping point, where price shifts from one direction to the other, to the opposite. Now, just judging by this particular picture I'm showing you here on the New Zealand dollar. Now, by the way, the symmetric setup can be found everywhere. It's not a trading methodology that it's extremely rare and hard to find and stuff like that. I find these everywhere, right? Really, not only in the Forex market, by the way. I'm going to show you really cool stuff in the crypto market as well. I mean, just yesterday, I was able to make 100% return on the Ripple by doing this very stuff that I'm showing you right now, relying on this very stuff, the symmetric methodology and other supplementary elements, by the way, that I'm going to share with you as well. But yeah, I mean, this is applicable to any market. Just name it. All you need to have is price that goes up and down. That's it. It works better if you got a bigger asset. The bigger, the better, right? That's always true with regards to technical analysis, by the way. So I'm using this on futures, I'm using this on the foreign exchange market, and I'm using this on the crypto market. Exactly the same. Exactly. All right? Just bear that in mind. So back to my point here, you can see actually here on the New Zealand dollar, like I said, you can find this anywhere. And it's also applicable on any time scale. But here, it's a weekly chart, so it has a different meaning, right? It's not the same as applying this on a 1 hour chart, right? Because the legs in a 1 hour trading range are a few hours old, right? It's far from being the general trend. But here on the weekly chart, every single leg is highly important, because it's all about, it's going to take you to the next few months. So if you get this one wrong, it's going to be hard to make money. So basically, ever since the middle of 2016 and up until a few weeks ago, really, take a look right there. Actually, that was the beginning of August. This was the moment of the break. Take a look. I mean, price had tried to challenge that massive bottom key level. By the way, 67.14. If you ask yourself, that's the price target. That's the price tag. Sorry. So that's the bottom key level here, right? And it was supposed to be, it was the last line of defense, so to speak, last line of resort with regard to this, trading range, with regard to this sideways movement. So price at the beginning started to flirt with that level, right? Take a look at that touchdown we had here. That's what we call spike, right? It has a few names. You can find the name. You can find it goes by the name of tail, or well, I've heard a few names for it. I just call it spike. And it's an interesting case where price is going in a direction and bouncing back up quite intensely, and leaves that long shadow. Oh, by the way, that's another name for it: shadow, tail, spike. But what it means is that it was trying to break through and completely failed. So it kind of started to flirt with that level. Then we had the second attempt, which was successful, right? Now, successful, I always measure by the close. In this case, we're dealing with a weekly chart, so we're talking about a weekly close, right? I'm asking basically where the close of the week was. So in this case, as you can see, far below the 67.14. So that's what I call a decisive close outside of the setup. Now, what it means is that this massive trading range is basically over, and it is more likely, a lot more likely, that we'll see price continues the downside trend, right? Breaking outside of that sideways movement formation it was so involved with in the previous, more than 2 years, right? For more than 2 years, it was all about trading from pretty much the same level to the next same level and vice versa a few times. I mean, several times. Now, this suggests that it's over. First, it suggests that we're going to have a massive downside trend here. But second, of course, it suggests that we're going to have a massive downside trend here, which means we can make money if we go short. But it's not the end of the story, I have to say. This is just the general trend. Obviously, we will have to use other tools, more advanced tools, basically just, not more advanced, as advanced tools, but more setups, more symmetric setups that we apply on the daily chart, right? The daily chart is my execution chart at the end of the day. And on the 4-hour chart, by the way. So when I combine those setups, I can actually time the right moment, right? Because obviously, if you think about it, there's no point on opening a short position right here, right? You may be right on the general direction of the trend, which is nice, which is lovely, but you end up losing money, right? Because you get 2 weeks of very strong upside move. So it's, it's not enough to have a strong, solid predictive system coming, applied on the weekly chart. It's very important, no doubt, don't get me wrong, but it's not enough. You actually have to have the same thing on your execution chart. Now, I'm not a day trader. I'm not an intraday trader. I'm what you call a swing trader or a position trader, which means that I like to take the general trend. I like to ride a trend, right? Instead of occupying myself all day long, attached to the screen and having these emotional ups and downs all day long, I prefer to take it easy. And I actually find it to be more profitable, to be honest. Because when you do day trading, if you're not a master in day trading, right, you get to the point of over trading. And there are costs to trading. So you might find yourself damaging your performance. So I'm what you call swing trader, which means I can hold a position for probably a few days and up to a few weeks. That's usually pretty much the time span. It could be a few days, like 5, 6, 7 days. And it could be a few weeks. In rare cases, even 2 months where I hold a position. The longer the better. It just means that I'm making money. I'm really riding the trend. But I'm also operating on a money management tactics, which means I'm scaling into a position. I'm increasing the position when it goes my way, and with regards to the symmetric key levels, if one is broken, for example, I will increase the position. If one is failed to be broken, I will decrease the position all the way to the price target. This is how I work. So I basically play with my allocations, with my position size, all the way through. Increasing, decreasing, increasing, decreasing, right? Until I hit my price target. Usually my price targets are from, I would say, 100 pip, 150 pip at the minimum, right? At the very minimum, I would say 150 pip, all the way to 600 pip, on rare cases even 700 or 800 pip. I would say on average, I'm aiming at 300 to 400, 500 pip. That's in most cases. So I think, I don't want to put too much information in just one session, right? Obviously, I want to build it up nice and slow, gradually. We got time, but we want to do it right. Okay, so obviously this has a strong connection. What I'm going to teach you here is the real stuff, right? This is stuff that actually helped me to reach the point where I'm at right now, like I said before, and it has a strong connection to the sessions we're going to have on Tuesday. Tuesday we're gonna be doing the real, the real stuff, live stuff, to the point, action taken, just trading, real time trading. Here we're gonna talk about the stuff that leads us to the decisions that leads me to the decision that I make, and so forth. All right, guys, I think that's enough for today. I hope you enjoyed the session. Obviously, I'm going to show you really cool stuff in the future, so hang in there, be consistent. Obviously, that's very important. I want to wish you a great trading day, and we'll see you on Tuesday on our real-time market trading analytics. So see you then. Take care. Bye-bye.